Hey everyone, welcome back to Corporate Decoded, the place where we unravel the secrets hidden within these massive corporate filings. Today we are diving deep into a recent report to see if this company is truly reaching for the stars or just fumbling in the dark. Grab your popcorn because we are about to decode AST SpaceMobile Incorporated. We're looking at a filing that touches on some pretty important corporate decisions regarding their stock and how they plan to keep their employees rewarded. Think about what it means when a company decides to give out more stock options. It could be a sign of confidence or it could be a dilution of existing shareholder value. Let's find out what AST SpaceMobile Inc. is up to. So this report is from AST SpaceMobile Incorporated, a company that is aiming to provide cellular broadband services straight from space. Pretty wild idea, right? They are essentially building a satellite network that will connect directly to your regular phone without needing any special equipment. They filed this report because there was a big vote by their stockholders. This meeting happened on the 21st of November of 2025, and the main event was a vote on something called the Amended and Restated AST SpaceMobile Incorporated 2024 Incentive Award Plan. Now, that is a mouthful. What does it really mean? It is basically a plan to give out more company stock or options to employees and executives as a form of payment and reward. This proposal had two main parts. First, they wanted to make more shares of the company's class of common stock available to be given out under this plan. Think of it like this: they had a certain number of tokens they could give as bonuses and they wanted to add more to the pot. Second, they wanted to extend how long this plan would be active. Instead of expiring in 2034, they wanted it to go until October 2035. Let's look at the voting. The stockholders really came out for this one. There were over 819 million votes in favor of this plan. That is a massive show of support. Now, you might wonder why so many for votes and so few against. Well, keep in mind the voting power breakdown. The Class A and Class B common stockholders each got 1 vote. Purse hair, but the Class C common stock holders had a whopping 10 votes for every share they owned. This means that even a smaller number of Class C shares could have a huge impact on the overall vote. The meeting had a quorum, meaning enough shareholders showed up to make the vote official. A huge chunk of the company's voting power, about 80.2%, was represented. So, when you see numbers this big and this much support, it generally means the management and board got their way on this particular issue. And they did. The stockholders approved the plan. This means AST SpaceMobile Incorporated can now issue more shares as incentives. On the surface, this is often seen as a positive for employees who get rewarded, but for existing shareholders, it means their ownership stake might get a little bit diluted. If the company gives out a lot of new shares, your single share represents a smaller piece of the whole pie. It is a balancing act companies try to manage. They want to attract and retain top talent by offering ownership through stock plans, but they also don't want to overly dilute the value for those who already own shares. The key takeaway here is that the company is betting on its future success and is willing to give out more ownership stakes to those helping them get there. This plan is designed to encourage long-term commitment and performance. If AST SpaceMobile Incorporated achieves its ambitious goals of providing space-based mobile connectivity, then those who receive these awards, and by extension the shareholders who didn't see their stakes significantly diluted, will hopefully benefit. Now, looking at this from a high level, AST SpaceMobile Incorporated is in a very capital-intensive industry. Building a satellite network is incredibly expensive stock. Base compensation plans like this are a common way for companies, especially those in high-growth research and development heavy sectors, to manage cash flow. Instead of paying huge salaries and bonuses in cash, they can issue stock. If the company does well and the stock price goes up, employees benefit handsomely. If it doesn't, their compensation might not be as high as a cash bonus, but the company saves on immediate cash outflows. What are the risks here? Well, the primary risk for any company with a plan to issue more shares is dilution. If the company's market capitalization doesn't grow proportionally with the increase in shares outstanding, each share becomes worth less. Another risk is that if the company's stock performance is poor, these incentive plans might not be as effective in motivating employees. It is a bit of a gamble based on future performance. In conclusion, the approval of this amended incentive award plan by AST SpaceMobile Incorporated stockholders signals a clear intent from the company to incentivize its team and potentially fuel future growth through equity awards. While this can be a double-edged sword for existing shareholders due to potential dilution, it is a common strategy in ambitious tech ventures. The real test will be whether the company can execute its space-based connectivity vision and whether the value created from that execution outpaces the increase in the number of shares. For now, it appears to be a necessary step for a company with such bold aspirations. Alright, that is our decode of AST SpaceMobile Incorporated's recent filing. What is your take on this incentive plan and its potential impact? Do you think it is a smart move for the company and its shareholders, or does the dilution factor concern you? Drop your thoughts and opinions in the comments below. If you found this breakdown valuable and want more straight to the point corporate analysis, please hit that like button and subscribe to Corporate Decoder. And don't forget, we have a fantastic community over on Discord, linked in the description, where we dive even deeper into these topics. Thanks for watching, and we'll see you in the next Decode.